Understanding commodities, the building blocks of wealth. In the world of finance, there are many paths to building wealth. One path, often favored by the rich, involves commodities. So, what are commodities? They are the raw materials of our global economy. Think oil, gold, wheat, and coffee. These basic goods hold intrinsic value because they are essential for our everyday lives. Commodities are traded globally, which means their prices can fluctuate based on supply and demand. A shortage of coffee beans in Brazil can spike prices worldwide. This volatility is where opportunity lies, especially for those who understand the game. But commodities are not just about trading. They represent tangible assets. Unlike stocks, which are just pieces of paper, commodities have real-world applications. This tangible nature makes them attractive during times of economic uncertainty. Understanding commodities is the first step towards harnessing their wealth-building potential. It's about recognizing their importance in the global market and how their price fluctuations can be turned into profit. Gold and silver, the eternal allure of precious metals. Among commodities, gold and silver hold a special place. They have been treasured for millennia, coveted for their beauty and rarity. But their appeal goes beyond aesthetics. Gold and silver are safe haven assets. What does this mean? When inflation rears its ugly head and paper money loses value, gold and silver tend to hold their own. They act as a hedge against economic turmoil. This is why the wealthy often flock to precious metals during uncertain times. Historically, gold and silver have played a crucial role in monetary systems. They backed currencies and provided stability. Today, they still offer a sense of financial security. This enduring value makes them a cornerstone of many diversified portfolios. While other investments may rise and fall with the tides of the market, gold and silver stand as symbols of enduring wealth. Their presence in a portfolio can offer peace of mind and a measure of protection against economic storms.
The wealthy understand that diversification is key to preserving and growing wealth. Commodities play a crucial role in this strategy. But how exactly do they leverage these assets? One way is through direct investment. The wealthy often purchase physical commodities, like gold bars or silver coins. This provides tangible ownership and a sense of control over their assets. Another approach is investing in commodity-based companies. These companies are involved in the exploration, production, or distribution of specific commodities. By holding shares in these companies, the wealthy can capitalize on the growth of the commodity sector. The wealthy also use sophisticated financial instruments like futures and options to profit from commodity price movements. These derivatives allow them to speculate on future price direction without owning the physical commodity. Remember, the wealthy approach commodities with a long-term perspective. They understand that market cycles ebb and flow. They are not deterred by short-term fluctuations and remain focused on the long-term growth potential of these assets.
Section 4. The commodity game. Weighing the pros and cons. Like any investment, commodities come with their own set of advantages and disadvantages. Understanding these is crucial before diving in. On the plus side, commodities like gold, oil, and agricultural products offer a hedge against inflation. As the cost of goods and services rises, so too does the value of raw materials. This inherent connection to inflation makes commodities attractive during periods of economic uncertainty. Furthermore, commodities can diversify a portfolio. They often move independently of traditional assets like stocks and bonds. This lack of correlation can help mitigate overall portfolio risk. However, commodities are not without risks. They can be volatile, with prices subject to sudden and dramatic swings. This volatility can be unnerving for some investors. Moreover, unlike stocks that pay dividends, commodities do not generate income. Their value is solely derived from price appreciation. This lack of passive income can be a drawback for those seeking regular cash flow. Additionally, storing physical commodities like gold and oil can incur significant costs. And commodities can sometimes lack liquidity, making them harder to sell quickly. Understanding these pros and cons is essential for making informed investment decisions. Commodities can be a powerful tool for wealth creation, but they require careful consideration and a strategic approach.
Section 5. Striking a balance. Finding the right commodity allocation. The age-old question for investors is, how much should I allocate to each asset class? The answer, as always, is, it depends. However, there are some general guidelines to consider when it comes to commodities. A common recommendation is to allocate between 5% to 15% of your portfolio to commodities. This range provides exposure to the potential benefits of commodities without overexposing yourself to their inherent risks. Of course, your individual circumstances will dictate the optimal allocation for you. Factors like your risk tolerance, investment goals, and time horizon should all be taken into account. A young investor with a long time horizon may choose to allocate a larger percentage to commodities, seeking higher potential returns. Conversely, someone nearing retirement might opt for a smaller allocation, prioritizing capital preservation. The key is to find the right balance that aligns with your financial objectives. Commodities can be a valuable addition to any diversified portfolio, but it's crucial to approach them strategically and with a clear understanding of your own investment profile.
Commodities can be a valuable addition to any diversified portfolio, but it's crucial to approach them strategically and with a clear understanding of your own investment profile.
Thank you for joining us on this journey through the world of commodities. We hope you found the information valuable. Don't forget to share your thoughts in the comments below and subscribe to our channel for more insightful content. See you next time.